Hi, today we're going to talk about rents. We're going to talk about rents increasing slower. So, to put it in a little bit of perspective, rents have gone up for 10 years steadily. In fact, I think for the last 5 years they've gone up 37%. So you think housing appreciation has been amazing. Rent appreciation has been, well, it depends on which side of the table you're on. If you're a landlord, it's been terrific. If you're a tenant, it's been brutal. So, but in LA County, rent actually dropped $1 from the spring of 2019, which that's not a big drop, but it could tell a little bit about the future, especially LA, because a lot of those units are new. So they built a ton of units in downtown LA, and thousands, 10,000 in LA, and a bunch of those are right in downtown. The new high rises with beautiful doormen and all the amenities, right? But guess what? We're kind of looking at those going, maybe that's not the best place for me to live. Riding up in an elevator and being in a confined space and all that stuff is not the most timely or desirable living situation today. So LA landlords had averaged a hike of $18 per month ever since 2010. That's a pretty phenomenal statement if you think about it. And talk about investment properties. In Orange County, the average fell $27, but the rent actually increased from a year earlier by $6 a month. So like it's basically really leveled off right now. And the thing about Orange County is it's not as susceptible as LA County to these big huge buildings, the new builds, the big high rises. They do have some. Irvine built some big ones and they're having some trouble renting them out, but those are the big guys, right? For the normal mom and pop type investors, most of those properties are pretty solid. They tend to be a lower priced property and more affordable, and not so many people in such a confined space. Riverside and San Bernardino, they've continued to go up. They don't have the same types of buildings, and even though it's slowed, it's less than it has been in the last 6 years. Now, and this thing we're seeing in LA is typical of the big markets, of all the big downtown markets. They are seeing a flight from downtowns to suburbs. I've talked about that in another video. So that is definitely decreasing the demand. And like I said, they had some supply they put on this past couple of years actually, and it's kind of finally all hit the market, and probably not at the best time. And part of it is just the nature of where you are. In LA, you've got some people in the service businesses, right? Whether it's tourism or entertainment, those sectors have been hit really hard. And if your tenants have a lot of those type of occupations, then you're probably going to suffer some rental issues. Like I said, some neighborhoods hit harder than others, entertainment. So another thing is that more and more people are working remotely. So it's harder for them to, maybe share a unit with roommates, because it's hard to have 3 people in a unit that really isn't designed for 3 offices. So maybe one of you's in the bedroom, one of you's in the dining room, one of you's in the living room, stuff like that. So it definitely, you have to think a little bit more in advance about what, if you're looking at buying these properties, are they going to suit or be in demand from the renters that are coming now. And then, like I said, we're seeing the migration from the cities to the suburbs. Santa Barbara is seeing people moving out there, and of course San Bernardino, Inland Empire, and out of state. Well, we always know what out of state means, but it's also an interesting stat that Los Angeles, Orange County rents have decreased in 14 of the last 103 years. So if you have been wondering if investing in rental properties is a good idea, I think that's a pretty compelling stat.